Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is March 5th, 2018, and tonight I'm going to be taking a look at soybeans, the ETF being SOYB on the long side. Now we've got the short, intermediate, and long-term trends all pointing to the upside. We have two warning signs here. One is the technical rating for the market is basically flat, not really exuding a lot of strength to it. And then we have the accuracy, or excuse me, the seasonal accuracy, which is actually pointed to the downside. So I'll show that to you in a few minutes here. Now, as far as the deep dive itself, the reason I'm really pointing at this in corn and soybeans and wheat a day or so ago, or trading day ago, we actually had a surge high. And at least in some of those markets, soybeans being here in the middle. Now, if we take a look at soybeans in itself, here is daily charts for soybeans, and you can see this little plus sign that popped up here today. Now, that's a surge where the market has rallied and is starting to show a little bit of a reversal. Now, I just want to point this out, that this is today's action. If we take a look at this other daily chart, you can see this resistance level of 50, which is a strong one. If we go all the way across the screen, it's really pointing to the high of today as finding some of that resistance. So the market has had a nice little rally. These little rallies happen on a somewhat regular basis. We'll look at that as well. But because we're running into resistance and we have the surge high having occurred, now is a good opportunity to take some profits. That's really what the surge is all about. If we pop back to the website, just want to show you a couple things here. Here is soybeans. We've got three long positions here in soybeans. We've got a nice open profit here, and that being the case, there's probably opportunity to take a little bit of money off the table. When it comes to the tendencies to having a trending phase, soybeans is actually at the high end here, where it has trending qualities to it on a regular basis. So we're in a trending phase. That's why it's black. Oh, excuse me, right here. Soybeans right here, it's in black, and this occurs about 46% of the time. We're not in a strong bullish phase, super strong, where it's gone parabolic, but this does happen quite frequently in soybeans, 10% of the time. So right on the cusp of a really strong bull phase. But if we take a look at the seasonal tendencies to the market, first thing is soybeans are high on the list. They're number 4. Corn and bean meal and soybeans. We've got a lot of the grains. Here's Kansas City wheat, and then we got wheat way down here. So soybeans certainly are one of the stronger markets when it comes to the accuracy of being able to watch that particular trading style. And you can see here on the 10-year charts, the red bar here, line chart, is a 10-year analysis or a 10-year seasonal chart for soybeans. And the point that I'll make here is that we are very, very close to the market hitting a seasonal high before we have a traditional sell-off in the market. So when you really look at the market as a whole, and you have this condition where the market is looking to take some profits. Now, this surge high that is popping up here is a profit taking. It's not always a reversal. For the most part, the correct interpretation is that the market has reached a certain surge or a certain thrust to the market, and it's probably worth taking a little bit of money off the table because the market is probably going to taper off and reverse course. Now, I just showed you the soybeans seasonal chart. There's still a little more upside potential, so we're predicting a top, and sometimes this really does occur here with the surge high indicator in soybeans, but in many cases it can take a little while. But inevitably we're going to get a stretch high, which is a reversal indicator, and that will probably occur within the next 2, 3, 4 trading days or so. So this might be a little premature, this surge high. But when you take a look at the seasonals, it's there. It's telling you that the opportunity is ripe, and if you're in a position where your systems happen to be long, your trading style has you long soybeans, might be a good opportunity to take a little bit of profits according to that particular indicator. Obviously, we'll watch what the systems do ourselves. We'll see as to whether or not and how things kind of play out here with the systems, and then looking for that stretch high, which is inevitably going to happen, and that could be happening, as I mentioned, the next 3 to 4 or 5 days or so. So we'll watch the market, but look for opportunities to unwind part of your soybeans, at least on a short-term basis, and we will take a look at another market tomorrow. Thanks very much for watching. Bye-bye.